quarter for 250,000, 250,000, 3 A's, take them. Hey everybody, it's me, the Einstein of Wall Street, out front of the New York Stock Exchange on Friday, the beginning of May. It is not May Day. It is not a day to go away. I'm here with Dan Ives, #1 tech analyst in the friggin' world. Nobody has access to Dan like me. Let's talk for a moment. We are in the middle. We are at the crossroads of walk and don't walk, Broad and Wall. We need to break down what is exactly happening. We have now had 9 consecutive up days in the market, while the rest of the world seems like it's like we're stuck in the middle of a tanker ship with not enough food, too much sun, absolutely no, tanning lotion. Right? We're getting a little bit burned. Have you ever seen we're talking, the New York Post called him the best dressed man on Wall Street, and now we know why. I mean, he's like a Rousseau painting. Let's be serious. There are birds in his pocket. If you pull one, I can hear them. Anyway, let's talk about the market. So where are we here? We got, let's talk earnings for a second. So we had Microsoft. Well, why is the market up is a really good question, and we'll try and figure that out. We have been on CNN for the last 9 nights talking about the fact that the state of the world at the moment is, we're in trouble. Right, the clock is ticking. We are days and weeks away from an absolute interruption in the supply chain, based on the fact that this whole tariff thing, right? We had that deliberation day, while the market continues to go up, and sometimes the market and the economy and the world tend to go in a bifurcated type of way. But there's a lot of problems going on, and we talk about it every night on CNN. But I want to break it down with Trade Like Einstein and Einstein and Ives here, because it's really important to know what's going on.
So first,
talk to me.
The tech trade, anything that you were hoping to get from big tech, you got. They doubled down on CapEx.
Okay.
So there was fears that you were going to pull back, that they were going to on CapEx. They didn't. They doubled down. Cloud spend strong from Alphabet, from Microsoft, from Amazon.
Okay.
Digital advertising strong, and the AI revolution trade is not changing because of the tariff. It's not really slowing down.
You thought it was going to.
So we talked about, like, you thought that customers were going to rein in spend. Instead, customers are basically being like, look.
Sorry to interrupt you, but is this what we just learned from Microsoft's release yesterday?
I think from the last
couple of days.
I think this week.
This is what we're learning from this week?
This is what we've learned.
Okay.
And then you've learned that customers are not pulling back. They're continuing to plow ahead with AI projects.
Okay.
And I also think many customers view it that when deals get done, and they will get done, they don't want to be sitting there pausing projects, then having to restart them. So it's also, as much as me and you always talk about deals need to get done, markets for enterprises are basically, they know that that's going to happen.
Right.
So the last thing they're going to do is just change their CapEx, change their hiring, because of ultimately, I believe we're talking what's going to be a temporary period with a lot of these,
Okay, so the narrative we're talking right here is a lot different than we've been talking for the last number of days, right? We've been laying out a scenario that is not as positive of what you're saying. And I I agree with you, because my narrative has changed in my head.
Well, I think it's bifurcated too, in terms of narrative.
Okay, so let's talk. So we had a couple companies that came out with earnings that were disappointing, like Apple last night and Amazon.
But I'll caveat that.
Okay.
I would disagree that they were disappointing. I'd say that they were. I think these are stocks over the next week that are going to be higher than they were before they released earnings.
So it's an emotional reaction.
It's an emotional reaction. But also, when it came to Apple, me and you have talked about tariffs. They've been able to navigate because of India much better than anyone would have expected.
Even though they said it's going to cost them $900 million.
The fears were ultimately we're talking $3-4 billion a quarter.
So it's so you're talking It's kind of like there's no food. We have absolutely nothing to eat, but we still have a little bag of caviar.
Look,
you're going to starve to death, but you're going to live on caviar for the next.
And
year.
I'd say essentially what Apple has been able to do in almost a Hall of Fame move.
Right.
They were given the flexibility because of these tariffs, the 90-day pause.
Right.
Apple behind the scenes has aggressively basically now gone right after India as the core market.
Wow, okay.
And ultimately, when it comes to China, they're going to be exposed, but India has given them the ability to basically diversify their supply chain. in a matter
When did
of...
we find all this out? Because we
So-
haven't been talking. This has not been part of what we've been talking about.
So this has been, it's been
a
happening...
little birdie speak in your ear last
So
night?
it's been happening slowly.
Okay.
But what they unveiled last night
Okay, where was this?
was a game on their conference call.
Really?
It was a
Okay.
game changer.
Wow, okay, that's huge.
And yeah, let me just put some numbers.
Yeah.
They were doing 5 to 10% of iPhones from India.
Right.
You know what they just did this last month?
And so 90 was coming out of China.
50% from India.
Really? Okay.
Like this.
So they pivoted incredibly quickly.
They pivoted in a way
That's unheard of.
that I think decades from now,
Right. We're going to look back at this and go.
one of Tim Cook's biggest achievements
Right, will have been this.
Will have been this.
So it's literally like taking a massive tanker and turning it on its
They
on a
took
dime
a tanker around in a little pond.
in a little pond. That's unbelievable. So okay. So look, we've been a bit on a doomsday Armageddon narrative for a while because of what's going on with tariffs, the lack of continuity, clarity, what's going on. People don't know. Cost of goods sold, tankers are piling up in the China Sea and all that kind of craziness. But what's happened over the last couple of days, I believe, is the narrative is changing. We've been talking about we need deals. All you're getting is talk without anything locked in. However, maybe the market has been already had some foresight. Why is the market up for the last 8 days?
Because market knows deals are going to come through, de-escalation is going to happen, specifically on India, South Korea, Vietnam.
Okay.
So even though you're seeing these hits here in terms of like whether it's GM or whether it's Apple, market's basically saying the next 3 months I don't care about. It's a mulligan.
Okay.
I'm focused on what we're going to look like in the next 6, 9 months and into next year.
Okay.
And I think on that narrative, we start off Armageddon. White House backed away, right? In terms of, and I think now it's pretty clear, even based on what Apple's doing, India is going to be the first deal.
Wow, but you almost had foresight of that. So we're going to turn this boat around here because look, Dan and I have been talking, and we've been a little bit doomsday here for a while. But seriously, day after day over the last probably 5 days,
on tech,
things that on tech. Okay, but what about the rest of it?
Okay,
so tech's just one.
So that's where I think we have to separate what's going on.
What did you wait a minute? So we said tech, right? They told us they can't sell their chips. So this is the pivot from them not being able to sell chips to China, and
India.
the fact that you said that Nvidia got cut off at the knees by what the president said.
So what essentially what's happened here is that, and Nvidia still obviously has issues because of the China, but what's really happening is India is now being used as the go-between,
right,
to basically the finished goods.
Right.
Basically, you could produce them in China,
right,
ship them to India,
right,
final assembly in India.
Oh wow!
Ship them to the U.S.
And that way we can sort of transcend what's
and
going on here with tariffs.
view, essentially, what's happening is the White House is being like a wink and a nod.
Nothing to see here. Right. Wow, that's crazy.
So I think that narrative.
Wow, that's crazy. That completely changes everything.
No, I think that narrative has started to shape up, but last night
it came through when Apple spoke on the
I think that really it all came together.
Okay, now Microsoft the day before came out with killer earnings,
but
it took the market up 6, 7,
and it was up 10%.
points.
And the reality, I mean, enterprises
are
accelerating spend when it comes to AI.
That was the main thing that came out of their conference call was we're spending $50 billion plus or $500 billion on capex.
And our whole thing has been, you know, if you look at what we've talked about the last 2 weeks, is that all of our checks have shown software is the safety blanket.
Okay.
Tech is the safety blanket. The reason we didn't downgrade any stock in tech over this last 5 is because tech is going to be that sort of rock of Gibraltar in this market. Now look, when it comes to like Harley Davidson, a lot of the
talked about General Motors with a 20% cut
so that's,
in earnings.
That's a total separate situation.
Okay. So this is very tech-centric, we're just talking about.
This is tech-centric.
Okay.
When you go to GM, that's
a different story.
It's a bad situation.
So auto is in trouble.
Auto is in a bad situation because auto, it's about these the auto parts tariffs.
Right. Which way?
Apple could pivot to India.
Right.
Where's GM pivoting to?
Exactly. There's nobody making those parts.
You can't pivot.
Okay. Right, so
and I think that's now, you talk about, we're almost seeing a decoupling,
right,
in this market.
Okay.
Between
tech.
have and have-nots. Tech
And so
Non-tech.
so auto is still trying to figure it out. They're trying to pivot, but they don't know where
Auto,
to pivot. They may not be able
Consumer products,
to. Right.
e-commerce.
Those are still problematic.
But
Very
those,
problematic.
those are all things we're talking about, and those continue to be.
Okay.
So essentially what's happening is the market
Right.
is separating
Right.
from what's happening there, because the market's basically saying tech, check.
Okay.
Software,
Tech, check. Did you dig that? Go ahead.
Check.
Right.
but then the other area, they're going to be in a pain.
So
a
we're
lot of
still talking about boats into China Sea backed up
All
with
of
consumer
that.
goods that are going to
But
be
what
coming
is that?
into the U.S.
T-shirts,
Right.
food,
Right.
consumer products,
Right.
Walmart,
Paper towels
Home
and
Depot,
toilet paper.
But guess what? The strong get stronger. Big tech,
Right.
they're playing a whole different game.
So
than the
let's
rest of the
visualize
market.
this for a minute. We're going to be standing in our house, right, wearing shorts on our iPhones, but we won't have paper towels to wipe our face from dinner.
But that
Is
no,
that what we're talking about?
or you're essentially going to pay
Triple.
triple.
We're going to be going to the dollar store.
Look, and that the dollar store might
To
maybe
make,
not.
because India is going to be making the paper
The
towels.
dollar store might now be known as the $3 store.
The $3 store. I love it.
Canada.
Okay, so let's talk.
The auto industry in Canada.
Okay, please. Thank you. So listen, I love that story, but there's so much more to talk about. Where does the market go from here?
I mean, I believe market goes higher because institutionally, you under-own tech. Retail has stood in, institutions have basically, I think, bailed out a lot of
Right,
tech.
but we've seen a broader footprint in the market's rally over the last 8 days.
But I think you're going to
than
see
just tech.
I think you're going to see a significant tech trade over the
Right.
next 3-4 weeks.
Okay.
Because investors are basically, whether it's Meta, Microsoft,
They don't want to be
Apple,
underinvested in.
Now you
in
can.
tech.
Now you can, because everything you heard
Right.
gives you that much more confidence.
Okay, so that's huge. But the rest of, so let's talk about it. We talked about, I talked about my Trumper guy, right, from the floor yesterday. We've been talking about how significant is it to talk about a 5-year off factories being built. And my guy on the floor, my Trumper on the floor said, yes, but who's going to be building those factories? People are going to be put to work, right? And there is going to be some kind of traction as far as that goes. So the administration is not under promising.
Oh, I think they are. I mean, remember, it comes down to everyone likes manufacturing. No one wants to work in the actual factory.
Right.
So the point is that it takes 4 to 5 years to build a factory, and
Right.
the reality is, what they're trying to do, a lot of that's unrealistic. Even when we're talking about Apple, what's the go around? Is it the U.S.? It's India.
Right, so we're not going to be
No.
making those
So
products.
let's just be clear.
And you're saying that your Americans are not going to be out here building. Look, but those factories are going to be here. Whether it's Apple, whether it's some of the car companies, those things. That's what the capex promises.
And I believe that'll be small pieces, but the reality of us becoming a manufacturing powerhouse.
So relative to what this guy just said, what about Canada and Mexico? Are they going to be where the factories are?
The reality is that part of the issue that GM's having is the exposure with Canada, with Mexico.
Right.
And I just continue to believe that's going to have to be de-escalated. Otherwise, U.S. car companies have no option.
They have nowhere to go.
They have
So we may end up having the next 5 years of
Now,
really
look,
expensive cars.
if you like Pinocchio and fairy tales,
Right.
think that we're doing manufacturing here.
Yeah, right. I
If
get that
if
too.
you like living in reality and math,
Right.
it's not happening.
It's not going to happen. So let's talk about the numbers that came out this morning. Job creation, 177,000 versus 135. Now, that's good. A lot of it was, where was it? It was transportation
Yep.
and manufacturing. Right? Why did we see a surge in manufacturing and what did I just say? Manufacturing
Yep.
and
retail.
And where? No, it was manufacturing and warehousing was where the job
But that's a
surge
pull
was.
forward.
That's meaning.
Meaning you had some pull forward demand that maybe propped up some of those job numbers.
Okay.
I don't view that as a huge barometer going forward.
I kind of thought maybe that was some of those products that were being hauled in here under the radar
No.
to try and get here before the tariffs.
It's
Is
a,
that
that's
was?
it. It's a pull forward.
A pull forward,
But,
that's what you
but
meant.
saying
Okay.
that job number, that would be like me looking at a postcard of me and you
Right.
that looks like a great postcard, but 10 minutes later we got into a car accident.
Right. So, it
So
doesn't
the
look
point,
so
yeah,
good.
exactly.
Okay, so listen, you got 1 minute to go. So we've dealt with the earnings. We've dealt with what's going on with
But you
tech.
feel good. Look, as a bull going into the weekend,
I'm feeling a lot better than I did a week ago.
Listen, a month ago I was wearing a black suit.
I know you
So
are.
the point is, look, we are in a much better situation, but we're climbing up Mount Everest.
Okay.
We're only halfway there. You still need
Are
oxygen.
we climbing this wall of worry? Is that why this market is up the way it is over the last 8
and
days?
the market knows whether it's India, South Korea,
We're
Vietnam.
going to have a deal because the alternative is way dark.
And basically, they know White House is going to have to back
Step
off.
it all back.
You'll have a 10 to 15% type baseline tariff.
Okay.
China will be its own sort of mechanism that you have to deal with. But in that situation,
Right.
it's a much better scenario
Right.
than the
Than
dark days that we are
Of 2
looking
weeks
at.
ago. He was talking about Armageddon. We're now giving you some hope, okay? That's what I wanted to do. I could not go into this weekend, one more weekend, first of all, without any deals, and first of all, without that negative narrative that we've been talking that still comes out of the administration. Everybody's talking out of different sides of their mouth. The market has been super positive. I want to pivot into that mode, and I need for everybody to know that things are going to be okay.
And
that's where we're going.
And
with this.
earnings gave you that.
Earnings are
But
surprisingly incredibly well.
But the second part of that, you need deals.
We need deals.
Because the market's up.
Without deals, we're not going to get the guidance that we're looking for.
100%.
Right. If we don't know the cost of goods sold, we're standing there.
When Apple gives
we're standing there naked in the wind.
When Apple gives a $900 million, that's assuming things are where they are today.
That's best case scenario.
That's best case.
Right.
So this is all about de-escalation, what we need to have happen.
De-escalation, solid earnings, reasonable guidance. We're turning the narrative around. This boat is turning around, and that's all I got to say. You are the greatest.
Turning it around.
You are the best dressed man on Wall Street, and that's all I got to say about that. Out of here. Let's go. Boom.